Hello and welcome. I'm Darren Christensen, founder and head trader here at the King of Forex. Firstly, thanks for being here. You probably saw an ad, clicked on it to receive your free training. So first of all, I want to thank you for doing that. I know you get bombarded with endless amounts of ads, so I appreciate you taking the time and the action to find yourself here. As promised, I'm going to share with you how to improve your trading results immediately without unnecessarily losing any more money. But before we do a deep dive into this training from one trader to another, let me ask you if you can relate to any of these problems that the overwhelming majority of traders continue to struggle with. Are you consistently losing money? Do you struggle to be consistently profitable? Are your results very inconsistent at best? Do you lack clarity? Do you know exactly what to do, or are you confused? Do you find yourself second guessing your reasons for entering the market until it drives you nuts and you enter the market anyway? Do you consistently worry about losing money? Do you lie awake at night thinking about the trades that you have in the market? And your very first thought is to check on your positions that you have in the market. Are you on a never-ending emotional roller coaster? Are you consistently anxious? Do you find yourself entering the markets based upon emotion rather than logic? Till you find yourself that you are just frustrated that you're not making as much money as you thought you would, as quickly as you thought you could. And here is the big one. Have you just gotten to the point where you begin to doubt your ability to do this thing, to get a handle on this thing called trading, to the point where you just want to throw in the towel? Well, let me tell you, if you want to turn everything around, first of all, it starts by you taking full responsibility for your results thus far and ask yourself these same questions. And if you've answered yes to any of these questions, or perhaps even all of them, then you've found yourself in the right place to completely begin the process to transform your trading results. I've been trading the financial markets now for 10 years, the last 6 years as a full-time professional retail trader. Now, of course, it wasn't always this way. I struggled for a long time, suffering from all these problems that I just mentioned. I was definitely part of the losing camp, and I'm sure you'll agree with me, it sucks big time. I know what it feels like to struggle. I know what it feels like to consistently take one step forward and two steps back, to make some money and then give it all back again, just to repeat the process over and over again, never seeming to get any real continuous momentum going. I have been in the trenches. I have scalped. I've been a day trader. I've been a swing trader. I've used every indicator known to man. I've jumped from strategy to strategy. I've traded on every time frame. I have blown up 3 live trading accounts, all in an attempt to become a successful trader. I have done everything that you shouldn't do. So whatever it is that you're struggling with right now, I have been there and I have done it. I'm sure you'll agree with me. Words don't teach, experience does. That is why you need to listen to me and absorb and implement this free training material. So if you're experiencing any of these problems, then you are definitely committing one, if not all, of these 5 deadly trading mistakes that I have identified over my last 10 years as a trader. If you truly desire to shift your trading experience from one of stress, anxiety, completely losing money, consistently losing money, to stress-free, consistently profitable trading, then what you're about to learn will be invaluable to you. What you are looking at is a one-pager where underneath this video, there are some questions for you to answer. You don't need to download anything. You don't need to print anything out. It's all here for you on one page, where you can simply write your answers on this one pager that you are looking at right now. So without any further ado, let's do a deep dive into these 5 deadly trading mistakes that make it virtually impossible to be a consistently profitable trader. Sound good? Great. Let's go. Let's rip into deadly mistake number 1. Okay, deadly mistake number 1, expecting to win. The late great Mark Douglas probably said it best. Trading is a random distribution of winning and losing trades. So no matter what your trading edge, the fact is that the distribution of your winning and losing trades are 100% completely random. So think of it like this. Let's assume you have a well-defined trading edge that has proven itself over a large enough sample of trades. So you know your trading edge plays out in your favor, let's say half the time, 50% of the time. So out of every 10 trades, for example, you win 5 trades and you lose 5 trades. So that much you know, because you know your trading edge has proven it. But what you don't know is the distribution of those 5 winning trades and those 5 losing trades. The simple fact is you never know with any degree of certainty whether you will hit a winning trade or a losing trade. Now, I know this sounds very, very obvious, but most traders enter the market expecting to win. Here is the major problem with that. If you're expecting to win, you are going against the very nature of the markets. The markets are random. They are not predictable. Expecting an outcome means that you are predicting an outcome. Expecting to win means you're expecting the market to conform to what you want it to do. This is absolutely disastrous, because when the market doesn't do what you expect it to do, which happens often, it opens up the real potential for your emotions to subtly creep in. So what's the solution? Well, it's very simple. Firstly, stop expecting to win every trade. The market cannot be controlled. All you can do is control yourself, therefore your actions. If you have convinced yourself that your next trade is going to be a winner, then you are in for an absolute world of pain. Undisciplined traders focus on the rewards. In other words, focus on the win. Disciplined traders focus on the risk of the potential loss. If your risk tolerance is in line with your trading plan, it really shouldn't bother you one way or another, whether your next trade is a winning trade or not. If you are focused on the reward, therefore expecting to win, and not the risk, you will place far too much importance on each trade that you take. If you really grasp this, then the focus shifts from the reward to the risk. Now, when this happens, when that focus shifts, when this happens, you have put yourself in a very strong position to allow your trading edge to play out. And given enough time, allow yourself to be a consistently winning trader. Okay, let's move on to deadly mistake number 2, doing too much. What is the single biggest reason most traders end up losing money in the markets? The number one cause of failure is that traders simply do too much. They do too much all the time. They look at their charts too much, they trade too much, they risk too much, and on it goes. They just do too much too often. Let me give you a quote from Warren Buffett. Here's a takeaway for you. The financial market is a device from transferring money from the impatient to the patient. The most successful traders and investors spend 99% of their time studying the markets and waiting for their opportunity rather than trading the markets. In other words, most of their time they are doing nothing. Can you honestly say the same about your trading, or are you spending 99% of your time trading the market and only 1% of your time waiting, probably impatiently? Most of the time, profitable traders are doing nothing. When I say nothing, I mean they are not entering the market. They are studying or analyzing the markets in the meantime. So you need to change your concept of what doing nothing actually means. As humans, we are addicted to doing what feels good more often than doing what is good. It increases the dopamine fix, the dopamine spike, the feel-good chemical in our brain. And once a trader starts trading and gets the dopamine fix, it becomes an addiction that leads to blowing out their trading accounts. It's as simple as that. So how do you fix this? Firstly, you simply understand, accept, and embrace the idea of doing nothing. Embrace what you would consider boring. Being out of the market is a position, and most of the time, it's the best position to be in. When you feel like you're not doing enough, you are probably in the right zone. You must master being able to do nothing, and you can do this simply by finding something else to replace the void, to replace the addiction of trading. Once you realize that being patient and studying the market, or simply not even looking at the market at all, will make you more money in the long run than the opposite. Your brain chemistry will begin to flip, and you will soon be looking forward to the hunt, even if it means waiting weeks between trades. If you are in the markets more than you are out of the markets, then you are doing too much. So if you know that this is your weakness, and I assume for most people it is, it certainly was for me, then spend more time getting that aspect of your trading right. More time disciplining yourself to do less, and I guarantee you that your account balance will thank you for it. Deadly mistake number 3, messing in the middle. This is a nice continuation from the previous deadly mistake we just spoke about. Without a doubt, one of the biggest challenges most people face is that they are interfering with their trades. They seem to have real difficulty in just putting the trade on and leaving it alone. It's as if they are compelled to manage their trades. Well, I call it messing with their trades, because most of the time they mess things up because of their need to be involved in doing something. In my opinion, based upon the hundreds of people that I've spoken to, the hundreds of people that I've mentored, in my own experience in my early days, the single biggest reason, apart from doing too much, that most traders fail is self-sabotage. By self-sabotage, I mean exiting your trades manually before price either hits your stop loss or your take profit. By doing this, you are really hurting your chances of making money in the market. Most of the time, the best thing to do is to do nothing. If you just do nothing and let the trade play out, more often than not, you will make money. Yet people have a very, very hard time simply doing nothing. Perhaps the most important thing to understand is if you manually close out a trade when it's going against you, you have voluntarily taken a loss. Trading is about maximizing your winners so they offset your losing trades. That's how we all make money in the market. You're going to have losing trades, but most of the time, you don't need to be voluntarily taking a losing trade. Time is a factor that you can't control, and it's the one that gives traders the most grief. Everybody wants to make money now. I get it. But the markets might have very different plans. You may have to sit on your hands for 1, 2, 3 weeks. And can you do that on a live trading account? That's the question and the problem that you must solve if you ever want to make money consistently as a trader. If a trade doesn't hit your stop loss, then the trade is still valid and could still work out in your favor. It may mean it consolidates for weeks and then takes off to be a 5R winner. For example, don't close your trade out because it's chopping or moving towards your predetermined stop loss. Traders, answer this question. Tell me what is worse. Your trade hits your stop loss, or you see the trade heading towards your stop loss and you begin to freak out and you manually exit the trade only to find that trade turn around and would have hit your take profit target. I know you've experienced this. It is very unpleasant. So here's a couple of takeaways. Understand this. Good trades often take longer to play out than you would expect. Often that time is much longer than you would want it to take. A market might chop sideways. It might flounder. It might retrace to within a few pips of your stop loss. That's certainly happened to me before turning around in your favor. But because there's a random distribution, as we said before, of winners and losers, it makes zero sense most of the time to close out your trades before they hit your stop loss. You can significantly help your trading performance by simply doing less and not fiddling with your trades. Now, I'm not saying you won't have losing trades. You will, but stop taking them voluntarily for no reason whatsoever just because your emotions got in the way. So many traders take so many losses that they simply don't need to take. Maybe it means you have to dial down your risk amount per trade so you aren't emotionally rattled when price begins to rotate towards your stop loss. Maybe it means you need to learn about stop loss placement. But whatever it takes, you must stop losing money simply because you've got nervous due to the choppy price movement of the market or price beginning to move against you. You must learn to control your emotions and let the trade play out. Okay, moving on to deadly mistake number 4, being a generalist. I've long preached the value of mastering just one price action setup at a time. Now, I want to discuss with you why it's so important to do this and the profound implications it will have on your trading results. I often find that traders don't fully understand how to trade their method, or that they don't really know what they are looking for in the market. They're just sort of winging it, if you like. You want to be a trading specialist and not a generalist. Let me ask you this. Are you trading with a combination of different methods, indicators, or systems? The first thing you are going to have to do is change how you think about trading strategies. Trading is not about learning as many methods or systems as humanly possible and then sort of combining them into some sort of hybrid holy grail trading strategy. Obviously, sadly, this is not going to help you. It will only hurt you. Becoming a trading specialist is simple, really, until you've really mastered one trading edge that you are using. You won't be hitting your full potential as a trader. You focus on only one trade setup at a time that you are truly confident in, that you have mastered it. And that might mean you only trade this setup for, let's say, 6 months. It's the one that you look for. It's the one that you study. It's the one that you enter the market when it presents itself. Once you've mastered how to trade it in all market conditions, and you have no doubt of how and when to trade this particular setup, only then should you move on to another setup. This is how you become a trading specialist. Right now, you are probably a trading generalist, meaning you're trying to trade some odd concoction of trading methods that you've learnt somewhere. Well, I'm here to tell you, you have to stop that if you want to realize your full potential as a trader. All you need to do is master one setup and trade it over and over again each time it comes up in the market with discipline and, of course, proper risk management. So if you lose money in the market, it's because you didn't put in the time, because you're impatient, to really master your trading method by mastering one setup at a time. You have no one else to blame but yourself. However, once you become a specialist in your method, when your trading edge is present, you will not hesitate. This is critical to realize, because the full power of your trading strategy, you need to take every occurrence of your trading edge that you see, because it needs to play out over a large enough series of trades to be proven. So you need to remove hesitation and indecision from your mind. And the way you do that is by mastering one trade setup at a time. And in my case, that means one price action setup at a time. Now, I know most of you won't do this because it requires patience and discipline, and it's boring. But for those who heed this lesson, I can guarantee you, if you become a specialist at one price action setup at a time, you will take money out of the market more consistently. Simplifying your trading is another huge reason why you need to master one trade setup at a time. Imagine this, sitting down at your charts and knowing exactly what you are looking for one trade setup. And if it's not there on your charts, if it's not present, then you walk away. That's your trading day done. Trading doesn't have to be complicated, nor should it be. The way you remove confusion or complication from your trading is by taking the time to master one specific setup at a time. You have to have the patience and the discipline to make this work. But I can promise you, if you take this specialist approach, it will improve your trading results out of sight. But you must give it time and you must learn to be okay with not trading. Remember, as you master one strategy, you can then move on to another. And after a while, you might have 3 or 4 different but very specific trading strategies that you can quickly look for on your charts each day. In my opinion, this is the fastest route to profitable price action trading. I'm going to leave you with this thought, traders. In any aspect, in any arena of life, who do you think makes the most money? Is it the generalist or is it the specialist? Is it the person who has taken the time and the discipline to be specialized in one particular skill? Trading is no different. I implore you, take the time to master one strategy until you know it like the back of your hand. It's the one strategy you look for. It's the one strategy you've learned. It's the one strategy you've traded until you've got that down pat. Then move on to add another strategy into your trading arsenal. Okay, daily mistake number 5, trading the lower time frames. I want to talk to you about why I trade the higher time frames and why you should avoid trading the lower time frames. Now, why am I saying this? It's because I have been there and I have done that, and no doubt one of the biggest, well, in fact, the biggest aha moment that happened for me was realizing the noise and false signals in the lower time frames were simply not worth spending my time on nor risking my money on. This was probably the most valuable lesson that I've learned over my trading career, and it's the one thing you can do right now to transform your trading results. From my experience, I firmly believe the daily time frame is the sweet spot and the time frame that you need to be trading on. Here's why. Number 1, it avoids overtrading. When you look at every time frame available to you, you are naturally going to find more signals. However, signals on the lower time frames are naturally less reliable than signals on the daily chart, because the daily chart works to smooth out the noise and randomness that occur on the time frames below it. Therefore, it shows you a more accurate picture of the market, allowing you to make a more accurate decision. Now, obviously, this means you will trade less on the daily time frame, but the trades you do take will naturally be of higher probability. So in essence, you lose quantity, but you gain quality when trading the daily charts. Not a bad trade-off when you consider your hard-earned cash is at stake here. I get it. Most traders love the allure of the lower time frames. They think they are somehow getting closer to the real action of the market and that they find more trading opportunities on these fast moving charts. The reality of the situation is that the lower time frame that you go, the less accurate any trade setup becomes. Therefore, by trading the lower time frames, all you are doing is lowering the probability of any trade that you take will be a winning trade by adding more variables to the equation of your Forex trading. Number 2, trading the daily time frame vastly eliminates fear. When you are inundated with a vast amount of market data from news sources and numerous different chart timeframes, you are naturally going to self-impose a certain amount of indecision and doubt into your trading. Also, when you don't have a trading strategy mastered, for example, like price action trading on the daily charts, you are naturally going to be more confused and less confident than you otherwise would be. In essence, you want to limit the number of variables that you use to make your trading decisions in the market, because there are essentially an unlimited amount of variables that traders can confuse themselves with. Not focusing on the daily charts as your primary technical analysis time frame, in my view, usually leads to confusion, indecision, and ultimately fear. Number 3, trading the higher time frames stops analysis paralysis. Many traders spend hours upon hours analyzing fundamental data, technical data, and anything else they can get their hands on in the erroneous belief it will give them some sort of more insight into the future track of the market. The problem with this thinking is that all these variables ultimately are reflected by the simple and natural price movement of a price chart. The daily time frame gives us the most pertinent view of the market, in my opinion. So if you are not focusing mainly on the daily chart, you're probably spending too much time on other less pertinent market variables that really are only going to confuse you and cause you to enter trades that are more based upon guessing as opposed to sound price action trading logic of the daily time frame. Number 4, it prevents being addicted to trading. This is a big one. This one is simple. Traders seem to think by looking at their lower time frames, they are somehow getting a more accurate view of the market simply because more data is coming their way. Yes, they are right. They are certainly getting more data, but they are wrong if they think they're getting a more accurate view of the market. Simply put, not every move in the market is significant. In fact, there are a lot of useless, meaningless price formations and price action setups on the small time frame simply because of the nature of the markets. We have to move up to the higher time frame, like the daily time frame, to see what all this movement on the lower time frame actually means. Number 5, the daily time frame gives you more consistent results. The traders who jump around from the 5-minute chart to the 30-minute chart and back again are naturally less likely to have a consistent, smooth, long-term equity curve than those traders who put their focus mainly on the daily time frame. This is because traders using the lower time frames are naturally going to take many more low probability trades set up than traders focusing on the daily charts. So very quickly, in summing up, one of the biggest advantages of trading the higher time frames is that they act as a filter of price movement. The lower time frames contain what us as chart technicians simply refer to as noise. The noise of the lower time frame is basically just price movement that is so erratic it cannot be reliably used to make any informed trading decision. When you trade the higher time frames, you get a clearer picture of what is really happening in the market because most of the erratic noise of the lower time frames has been filtered out and eliminated. So when traders begin to trade the lower time frames, they start overcomplicating the process by trying to read the inherent noise that is part of these fast moving charts. This inevitably causes them to overtrade, which, as we all know, is the main cause of failure in the financial markets. Finally, perhaps the most important reason why you should stick, in my view, to the higher time frames when trading the Forex market is because they add more weight to your trading strategy. As a price action trader, I know, for example, that a pin bar setup on the daily time frame is much stronger than a pin bar setup on the 30-minute time frame. Therefore, I simply prefer to wait patiently for the perfect daily pin bar setup rather than frazzle my nerves and lose money trying to catch a rare, high-quality 30-minute pin bar setup. Furthermore, I have far better things to do with my time than sit around all day and all night staring at the lower charts. And I probably suspect you do too. Traders, I hope you found this training helpful, but it's also my desire that you take action and implement what you have learned here. Be that person who takes action, and I can assure you, if you take on board what you have learned here, if you do the lessons beneath this video on this one-pager, then you will begin to see dramatic improvements around your emotions, around your trading decisions, and of course, that will reflect in a continually growing trading account. So anyway, guys, I want to thank you for taking the time for watching this video. Make sure you continue this process. Go down below this video here. Do answer the relevant questions, tick off the checklist, and make sure you spend the time brainstorming the answers to the questions that I've sent you. It's all designed to help you become a better trader. Until I talk to you again, bye for now. And again, thank you for taking 30 minutes out of your life to watch this training video. I sincerely appreciate it. Bye for now.